Surprise, surprise, surprise. It turns out that GameStop was not what you thought it was. This thing that everybody referred to as the GameStop rebellion last week, where the little guy was taking on the big guy on Wall Street. It turns out that narrative might have actually been false. There have been some studies done since then, and it turns out that everything you saw in the media about GameStop and how the GameStop rebellion was driven by these Wall Street traders, Wall Street bets traders on Reddit, might not be the entire picture. So I'm going to break this down for you and explain what's going on and why everyone's so surprised to find out what was really happening. We're going to get started on the Black Financial Channel right now. Good morning, everybody. My name is Dr. Boyce Watkins. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. It turns out that the GameStop rebellion might have been a big old lie. Last week you saw where there was this mutiny that took place where all these little traders, all these little guys got together on GameStop stock and decided they were going to just stick it to the hedge funds, right? Give me a yes or no if you were following this story, if you were real close on this. This was a big deal. Everybody was talking about this last week, and it was really fascinating. I talked about it a lot because it was great to see the whole world talking about the stock market. You guys know that's my thing. Well, it turns out today, according to CNBC, that a lot of that might have been a lie. That a lot of this might have been a fairy tale that was being fed to you by media without them actually looking at the data. And this is something that I actually suspected, in the sense that when a stock price moves that much, there are the sharks and there are the fish. And I told you that the reason the regulators exist is so the fish don't get eaten. The sharks are always going to eat, so some of y'all in here are sharks and you know what I'm talking about. I'd like to think of myself as a shark when it comes to stock market investing. And I know what was going through my head. And it turns out that there were a lot of other experts who were thinking the same thing. So I'm going to read some of this to you on the CNBC story, and it's going to kind of give you another point of view on what happened with GameStop last week. According to CNBC, that whole narrative of the little guy on Reddit, all the little guys getting together and taking on the big Wall Street firms, that just ain't really what happened, or that's not the complete picture anyway. So I'm gonna pull this up. Do me a favor, hit the thumbs up button, share button, and subscribe button as I pull this up. So give me a second. Let me pull this up on my screen. Let me know if you can hear me. Give me a yes in the chat if you can still hear me. I want to make sure my audio's coming through okay. All right. So according to CNBC, it says GameStop mania may not have been the retail trader rebellion it was perceived to be. Data shows that institutional investors were a big chunk of the drivers of the large stock price action in GameStop last week. Institutional investors, not retail investors, not the little guy. It was the big guys. They were making big moves behind the scenes. The big guys saw that all the little guys were rebelling. So the big guys sort of sunk into the crowd and morphed into the crowd and said, let me go in here and make this money right quick while nobody's looking. They also said GameStop was not. This is shocking. GameStop was not even in the top 10 most bought names by retail investors last month, according to JP Morgan. You would think that GameStop would have been the number one stock bought by the little guy. Remember, whenever I say retail investors, translate that to the little guy. Wouldn't you think, give me a yes or no, wouldn't you expect that last week with the GameStop rebellion and all the talking media, the little guys are all coming together and they're taking on the Wall Street firms, and wouldn't you expect GameStop to be in the top 10 most traded stocks amongst retail investors if that was the case? I mean, come on. All we talked about was GameStop. So this is from a Piper Sandler analyst, Richard Repetto. He said what was going on in the stocks forced hedge funds to cover, or they might have been playing to win. He said, so some of the hedge funds that were short on the stock. Remember, when you go short, you're selling first, and then that means you got to buy back later. So think about this, right? You make money by buying low, selling high. So the hedge funds were selling the stock, hoping they could buy it back cheaper, right? Well, when the stock price started going up, hedge funds had to go buy in order to cover their position. They were like, whoa, man, I'm losing money. I'm bleeding out. I need to stop the bleeding. So let me go ahead and buy the stock back. Well, a lot of people felt that the little guys were doing a short squeeze on a big hedge fund, particularly Melvin Capital, who lost billions of dollars through all this. There was no question Melvin Capital took a bloodbath. But remember, Melvin Capital is not the only hedge fund on Wall Street. There's tons of them. So some of the hedge funds were not going short. Some of them were going long. Some of them were in the crowd buying just like you. Some of them were buying or were following what was happening on Reddit and said, yo, I'm not going to jump in here and go short because that would be a sucker move. I'm a momentum trader and I'm going to go in here and go long. And I know that happened because that's what I did. When I saw that stock hit 113 and I saw the media chatter, I said, oh, this is far from done. This stock's got a long way to go. So I bought in at 113. So if I bought in at 113, I know that there were some other Wall Street people who bought in at 113. So anyway, let me keep reading this to you. Hit the thumbs up button. Please hit the thumbs up button and share this, not just the video, but also subscribe to the channel. A look at the list of the 10 most purchased stocks by retail traders during the market mania last month is missing one key stock, GameStop. AMC Entertainment and Plug Power, two names caught up in the trading frenzy along with GameStop, were popular buys among retail investors, JP Morgan found. Yet the brick and mortar video game retailer that seemingly put Wall Street on its heels is notably absent from the list. Now, what I'm going to do is I'm going to read to you the top 10 most purchased stocks of January from the little guy, right? The retail investors. The top 10 most traded stocks in January for the little guys were Apple, AMD, Tesla, AMC Entertainment, Plug Power, Facebook, General Motors, Microsoft, Coca-Cola, and Verizon. So retail investors didn't lose their mind. They didn't all decide we're gonna go put all my children's college fund in GameStop. You got some retail investors that got some damn sense that were still investing in blue chip companies like Microsoft, Coca-Cola, and Verizon and General Motors. But you did have some people out here having fun on GameStop. And one of the other things that kind of made me wonder what was really going on was a lot of these guys on Wall Street bets, some of them are 22-year-olds who ain't got no money. So it's not like they're putting millions of dollars in at a time. A few of them had money. Don't get me wrong. A few of them were doing okay. But when I was 22, I was broke. I don't know about y'all. Give me a yes or no in the chat if you were flat broke when you were 22 years old. So anyway, the prevailing narrative was that a band of Reddit-inspired small traders rose up against Wall Street by buying GameStop en masse, forcing a short squeeze by professional hedge fund managers who were forced to run for cover their negative bets or risk catastrophic losses. But several signs are pointing to institutional investors as big drivers of the wild price action on the way up. Quote, although retail buying was portrayed as the main driver of the extreme price rally experienced by some stocks, the actual picture may be much more nuanced. JP Morgan Global Quantitative and Derivatives Strategy Analyst Peng Chang told clients in a note. JP Morgan's quant team uses public data from exchanges and applies a proprietary methodology to identify which flows are from retail traders. GameStop was number 15 on the firm's retail buying list for January. Let's pause. GameStop, which was literally the number one stock discussed all throughout financial media last week, GameStop literally wasn't even in the top 10 most traded stocks among little guys. They were number 15. So maybe this was about the hype. A lot of people that were joining in on the hype didn't actually have the data. Well, they went and looked at the data. Let me read more. The rookie investor vigilantes grabbed the most attention by being all over social media, posting screenshots of their positions and crucifying Robinhood and other brokers when the firms were forced to limit trading in the high-flying names. Well, they weren't really forced. This is a little bit. CNBC is revealing some bias here because I don't think Robinhood was forced to do anything. The SEC didn't call them up and make them do it. They just did it and then said that it was because of margin requirements. That's like if somebody's dating your daughter and they keep telling your daughter, well, I couldn't call you for the last 3 weeks because I was busy at work. That just means they didn't want to be around your daughter. They didn't want to date her. That don't mean that they actually were busy. When a man really wants to do something, he finds a way to do it. If they really wanted to make that stock available for trading, they would have done it. They would have found a way. They just didn't want it to be available. I'm very suspicious of Robinhood's decision to restrict trading on that stock. I think that should be investigated. The membership of Reddit group Wall Street Bets has rocketed to 8.5 million subscribers. However, it's possible the noise from this crowd caused most to overlook Wall Street co-opting this trade to make a fast buck as well, data shows. Quote, maybe it's not as much of just the little guy versus the big guy, said JP Morgan securities analyst Devin Ryan. I think that it's reasonable to say the institutional investors were also very active in those stocks last week because there are institutional investors that participate in names that have elevated volume. I think most likely that was also expressed in some of the options activity last week as well. Let me tell you, back when I was, when I was being tortured in graduate school and I had to write research papers, I remember that I did a study once where I was looking at the correlation between volatility and volume, meaning stock price movements and how they're connected to the number of people that are trading a particular stock at a particular time. And one of the things I remember seeing very clearly in the data is that when volume goes up, volatility goes up. And in many cases, the price goes up. So in many cases, the stocks that get traded the most, they definitely have the wildest price swings. And if you have the ability somehow to accurately predict the direction of those price swings or to position your trade so that you make money from the volatility and you could do it soon enough, you can make $1 or two or 10 or a million. And so there are hedge funds out here, folks. I don't want you to hear this. I want you to be smarter than the average bear. This is the platform for intelligent black people. You ain't got to be black to be here, but just know that I'm here for the black community first, black wealth first, black people first, building my own community first. I just want you all to know that. Just in case any white people are listening, I don't hate you. I don't have time to hate anybody, but this platform is for black people. So I need you guys to be smart. I need you to understand that a smart investor knows how to make money in any kind of condition. It's like a businessman, who sells umbrellas knows that umbrellas tend to sell best when it's raining. And then when the sun comes out, they don't sit there broke and say, man, nobody's buying umbrellas because the sun is out. You know what they do? They start selling sunscreen. They start selling whatever people need. That's what they're selling. So just like the guy on the street when he'd be like, "Hey, what you need? What you need?" The street pharmacist, you know what I'm talking about? Hey, I got what you need, right? Well, the same thing is true when it comes to investing. In every environment, whether the market's going up, there's money to be made. When the market's going down, there's money to be made. When the market's going up and down, there's money to be made. When the market's flat, there's money to be made. There's always money to be made if you have a Swiss Army knife of available trading moves that you can use under different conditions. So these hedge funds saw what was happening with GameStop. And I'm telling you, when a stock goes up tenfold in a week, there is a ton of money available to be made for those who know what they're doing. That's what they're saying. They're saying that all this movement that you saw, where you're thinking that it was the little guy making the stock move like this, a lot of this was big guys pretending to be little guys, trying to just slide into the crowd. Didn't announce what they were doing, but just say, "Hey, let's go get us a couple million shares just to see what happens." And so this is according to CNBC. They said retail investors were actually net sellers of GameStop Tuesday through Thursday of last week. So when the stock price went up like crazy, a lot of the little guys, I'm not talking about the Wall Street Bets guys, I'm talking about people who had Robinhood apps who said, holy crap, my GameStop stock went up from $30 to $300. I'm rich, baby. I'm rich. Hey, give me a yes or no. Give me a yes or no. If you had a stock that went from $30 to $300. If you were in your Robinhood app, let's say you had bought $5,000 worth of GameStop stock and your $5,000 was suddenly worth 50 grand, would you at least consider selling that stock? Give me a yes or no. Would you at least consider like taking some off the table, going ahead and taking that money, putting it to the side just in case the world suddenly came back to its senses? Remember now again, if you've been listening to me and you've maybe studied from me or whatever the case may be, you know that GameStop is not worth $300 a share. You know this, right? That's different from a Facebook or an Amazon where you know Facebook is solid, Amazon's solid, Google is solid. GameStop ain't solid. GameStop, there was no way on this earth, and if you were listening to me every morning, you would know that I was telling you repeatedly, this stock is not worth $300. The carriage is going to turn into a pumpkin, and Cinderella's going to end up being sent back home. Right? If I'm telling you this, that it's only a matter of time before all that 50 grand in your account is going to disappear, wouldn't you think about selling at least a little bit? Give me a yes or no. Come on, let's just be honest. Hell yeah. some of y'all did sell. Some of y'all did sell. So if some of y'all sold when the stock was shooting up through the roof, don't you think some other people might have done the same thing? So this idea that the retail investors were net sellers during this time is not unfathomable. But then again, I bet that I wonder if the hedge fund guys were net sellers too, if they were trying to get out of their position. I mean, everybody. Again, this is why these situations can be dangerous, is because when a stock does something crazy like that, you're playing a big gigantic game of musical chairs, and nobody wants to be stuck without a chair when the music stops playing. So you don't know when the music is going to stop playing. So when the getting's good, you do take money off the table in a situation like this. So they said also here, according to CNBC, quote, what was going on in the stocks forced the hedge funds to trade to cover, or they might have been playing to win, said Piper Sandler analyst Richard Repetto. There always could be the hedge fund that was totally uninvolved, wasn't short, but saw what was going on and said, this might be a way I can profit by going long. New York-based hedge fund Sinvest Management reportedly made $700 million off GameStop mania, according to the Wall Street Journal. So not all the hedge funds got body slammed. Not all the big guys got hurt. One big guy got hurt, but a lot of the big guys made money. Another proxy for retail trading, trade reporting facility volumes showed that retail investing decreased significantly after Tuesday of last week. TRD volumes are basically all the trades that are not executed on exchanges. So what goes into the TRF is normally the vast majority of all the retail volume. So when I'm looking at the data here, it looks to me like there was actually a rise in retail trading up through January 27th. On January 27th, they went to 10.5 million shares traded, which was much higher than the previous couple of weeks, where they were hovering between 6 and 8 million shares. Now, January 28th, if I'm not mistaken, was the day Robinhood decided to cut their trading, where you could sell but you could not buy. So Robinhood did actually chop down a lot of the retail trading, because the next day you went from 10.5 million shares to 8.6 million shares traded retail, and then it drops down to 7.4 million. So I still convict Robinhood of really short circuiting any additional retail trading that might have taken place. And for that, they should be held responsible. But let me keep reading this to you so you can see the complete picture. They said retail trading volumes were near record highs at 50% on Tuesday, but dropped off more than 5% on Wednesday, signaling a decrease in individual investing in what was the thick of Reddit mania. So it dropped on Wednesday. Now Wednesday was not yet the day where Robinhood had restricted trading. That happened on Thursday. So some would say that this drop started to occur before, or not so much a drop. Let me say it differently. It wasn't that there was a drop in retail trading per se. It was more so that the hedge fund managers played a bigger part in the total volume than what was previously believed. So the whole pie got bigger. There was more volume being traded. There were more shares being moved around, but the hedge fund managers were moving just as much as the retail guys. It wasn't like it was only retail driven. That's the narrative I think that they're trying to push forward. So they said here that, quote, if this was just retail doing everything, that percentage would have stayed the same, if not gone up. Hedge funds might have been riding the wave and trying to benefit too. To be sure, trading brokers like Robinhood and Interactive Brokers placed trading restrictions on certain securities starting on Thursday, which could have contributed to the drop off in trading later in the week. Yeah, I believe that it did. I do believe it did. Now, a David and Goliath narrative transpired last week between the social media crazed Reddit traders and the major hedge funds shorting stocks like GameStop. However, some investors, including short seller Carson Block, speculated that perhaps the battle royale was Wall Street versus Wall Street. Last week, market historian Art Cashin, the director of floor trading at UPS, not UPS, UBS, who has seen some of these so-called short squeeze battles play out before, suspected that something more was at play than just rookie investors. Quote, I have some suspicions that this is not democratization. I'm not sure that everything you're reading is coming from the little guy, Cashin told CNBC last week. I think there may be some big professionals in there that want to turn the crowd into a mob and get them to attack the hedge funds by buying this. So basically what they're saying is that they believe that there were some hedge funds, there were some big guys who saw that the little guys were getting riled up, who went out of their way to get the little guys even more pissed off, so they would go attack the big guys even more. They maybe they saw that what was happening on Wall Street bets and said, hey, let's get people really fired up, because we know that wealthy people manipulate poor people all the time. We know that media manipulates people all the time, right? Who knows? Maybe there's a manipulation occurring even with this CNBC report, right? But overall, what I'm trying to say to you is that a lot of this stuff probably wasn't exactly what you think that it was. So the media doesn't. Craig Wallace says respectfully, you really don't expect the media to reveal the truth to you. Yeah, I agree with you. I agree. The media lies all the time. I talk about that on a regular basis. But just because they're telling a lie doesn't mean that they're telling the lie that you want them to be telling. Or just because they give you a truth doesn't mean it's going to be a convenient truth. Sometimes the truth is very inconvenient. So I'm not here to tell you that you're wrong. I'm here to just tell you that there are a lot of people who don't necessarily benefit from the direction the narrative goes, who have data that says that exactly as I suspected to you, that the hedge fund managers, when they saw this happening, everybody was in the fray. It wasn't when the food fight broke out in the cafeteria, it wasn't just everybody wasn't just participating in the food fight because they wanted to have fun and throw a bologna sandwich. There might have been some people who jumped into the food fight and said, oh, this is my opportunity to get that guy back who made me mad yesterday. Or I'm gonna go hit the girl who's the head of the cheerleading squad. I'm gonna go hit her upside the head with a bowl of oatmeal because I have a personal vendetta to settle. So a lot of these hedge funds have personal vendettas with each other. A lot of these hedge funds do short squeezes on each other all the time. They want to put each other out of business. So when they saw this happening, they said, okay, the mob is going against this other company. So how about I jump into the mob and help the mob to go and take Melvin Capital out of existence? Right? You ever think that could be possible? You ever think that maybe people could be settling personal scores by using market momentum in a way that is less than idealistic? Maybe they weren't saying like, let's just hold GameStop because we just believe in what we're doing. No, maybe there were some other people that wanted to stick it to Melvin Capital besides just the little guys on Wall Street. In fact, the so-called little guys, some of the Wall Street bets. So in fact, some of the little guys on Wall Street bets, you don't know what percentage of those people are individuals who are actually in the industry. Who are maybe they're hedge funds. I bet you anything that there were hedge fund traders that were right there in the forums pretending to be something else. There were bots on these forums. I went through and I was reading tons of comments, and some of the comments were repetitive and redundant. A lot of the people were very sophisticated investors who were deliberately using language to nudge the crowd along. So there was manipulation occurring all the way across the board. It wasn't just some sort of idealistic revolution. It was somebody that maybe might have had an agenda as well. So anyway, let me keep going. Let me keep going. And by the way, if you want to learn more about stock market investing, we have a free Black Stock Market Challenge. It's a 5-day challenge. You're going to learn a lot. It's basically a 5-day mini course. So if you'd like to go take a look at the Black Stock Market Challenge, the URL is right there on the screen, theblackstockmarketchallenge.com. Also, please hit the thumbs up button right now. Take a second. Please hit the thumbs up, share, subscribe button if you haven't done it yet. Okay, so let's keep reading. University of Chicago law professor Todd Henderson, whose research specializes in corporations, securities regulation, and law and economics, thinks hedge funds were the driving force of GameStop's meteoric rise. Quote, I know people are hung up on Reddit and the little guys sort of teaming up on the big guys. I think this was just big guys teaming up on big guys, Henderson said during the webinar on Tuesday. Henderson theorizes that hedge funds purchased a bundle of shares that would have otherwise been lent out freely to short sellers and bought them back from the short sellers. This created fewer shares for short sellers to borrow in the market, and that squeezed the number of possible shares available to be lent out, making it harder for short sellers to bet against the stock. The desperate short sellers needed to find new shares to borrow, but supply got constricted. So what they're claiming is that hedge funds might have jumped in and said, okay, in order for you to make this short sale, which people like Melvin Capital do this, right? In order for them to do that, they've got to borrow the shares. They sell first. So how do you sell something you don't own? Well, you got to go get it from somewhere, right? So you say, hey, man, look, I think I can actually make a good trade on your car. So let me go. You got a 2012 Toyota Corolla. Let me borrow your car so I can sell it. And then what I'll do is, in a few months I'll buy it back at a lower price, right? So I'll make money on the trade, and then I'll pay you back some sort of interest for letting me borrow your car, right? That's how short sales are made. Short sales are made where the short seller who's selling something they don't actually own has to go borrow that asset in order to sell it, right? Do you get what I'm saying? Give me a yes in the chat if you're following what I'm saying. So what they're claiming is that there were hedge fund managers who said they're doing all this short selling, so they need shares that they can borrow, and they also need shares they're going to have to buy back to cover their position. So what we're going to do is, because we know that the demand is coming. Gary Vee did a video the other day. Gary Vee did a video where he was explaining that he never went to business school. He just knew how to predict demand. He knew how to predict when people were going to want something. So when he knew people were going to want something, he would go find a supply of that thing so that when they came and demanded it, he will be ready to sell it. Well, when they saw demand, when they predicted that demand was going to go up for that stock from the short sellers trying to cover their positions frantically because they were afraid of what the Reddit guys were doing, they're saying that hedge fund managers said, okay, cool. We're predicting demand is going to go up. So guess what? We're going to be sitting on the sweet spot. We're going to go grab up all these shares, so that when you show up trying to get shares to cover your position, we're gonna be the owners of those shares. Like, I know you're gonna need water, so I'm gonna have a water stand set up waiting for you just when you finish the marathon and when you're really thirsty. Do you follow what I'm saying? Right. And this is a big part of business, right? The ability to kind of know what people want is important, right? So they're saying that that this is the way a lot of the hedge fund managers made their money, was when they saw that companies like Melvin Capital had to frantically cover their short sales. They went out and got all the shares, scooped them all up on the market so that they could sell them at a higher price, right? So Henderson theorizes that hedge funds, okay, I already said that. All of that price inflation, according to Henderson, quote, he says, all that price inflation was likely driven by vindictive hedge funds trying to squeeze out a hedge fund that was short GameStop. So again, the food fight breaks out in the cafeteria. There are some people that are just participating in the food fight because they're having fun and they just want to throw a bologna sandwich. But then there are some people who say, okay, in the middle of this chaos, this is my opportunity to go stab that girl on the cheerleading squad who took my position. Or this is my opportunity to go punch that guy in the face who made me mad at football practice yesterday. Because in the middle of the chaos, nobody's going to see me get up and walk over to him and hit him upside the head with my lunch tray, right? So regulation on the way. Here's more what CNBC is saying. While the GameStop bubble is popping this week, with the shares down more than 80%, regulators in Washington are not forgetting about last week's drama. Both houses of Congress are planning to hold hearings regarding the GameStop mania. Newly appointed Treasury Secretary Janet Yellen said she will be meeting with the heads of the SEC, the Federal Reserve, the New York Fed, and the Commodities Future Trading Commission to discuss, quote, whether recent activities are consistent with investor protection and fair and efficient markets. So basically what she's saying is, did little guys get screwed? Are the stock markets fair, or did it appear to be rigged? Which it definitely appeared to be rigged. There was a tremendous amount of market manipulation. They're going to uncover that. It occurred not just with the Wall Street guys, but it also occurred on that forum, right? And also, when they talk about efficient markets, they're basically saying, like, look, is our stock market turning into a crazy casino where there are big players, big sharks who can eat little fish by manipulating stock prices and doing what has effectively become a big, gigantic pump and dump? A lot of the smartest investors got out of the stock before the stock dropped down from $400 to 56. That's what they're going to look at. And I think that's okay for them to look at that. Now, the big problem is, and this University of Chicago guy seems to agree, is that sometimes regulators have knee-jerk reactions. They want to regulate everything. They want to jump right in and claim they're protecting the little guy and start restricting freedom, right? Again, whenever something bad happens, they use that as an opportunity to restrict your freedom. And so there are some people who are legitimately against that idea. But one of the things that you have to kind of understand, and this is what's important, it's not to say that there wasn't a lot of energy on the Wall Street Bets forum. It's not to say that there weren't a lot of little guys who were pissed off at Robinhood, pissed off at Melvin Capital. Absolutely. But think about this, right? Most of those little guys didn't even know who Melvin Capital was a month ago, right? They found out about Melvin Capital because people like me were talking about it, or they saw it on the forum, or they saw it in the news. But think about it. Did you wake up in July of 2020 thinking, my God, Melvin Capital, they're exploiting the world. We must take down Melvin Capital. No, you were thinking about things like white supremacy and F the police and with Trump supporters, whatever you were thinking about. You weren't thinking about Melvin Capital. You want to think about Melvin? So who put it in your consciousness that Melvin Capital was the devil? Who got these Wall Street guys all pumped up to go take down Melvin Capital? Well, it was probably somebody who had a issue with Melvin Capital. That's what I'm saying. There was someone who probably educated them on the fact, the accurate fact, that many of these hedge fund managers do harm society in certain ways when they're running around shorting stocks and creating lies and manipulating prices by going on TV to tell you that you should sell this stock so the price will go down so they can make money. That's not something that benefits society. So my bias is that they should be regulated a little bit more because some of what they do is stupid. If you're not actually making money in a way that makes sense, you're not helping America. You're not creating jobs. You're not building factories. You're not creating innovation. You're just buying and selling assets in a really tricky, manipulative way, and you're making $1 billion a year in the process. I don't like that so much, right? So some regulation should be called for, but not so much on the little guy. I think that there should be regulation on the big guy. I think that there should be regulation in terms of creating transparency among the short sellers. I think there should be regulations in terms of just even asking the question of whether or not short selling actually benefits society. Why are you trying to crash markets and stocks? I don't know why anybody benefits from that. But then also, I think just at the end of the day, here's the most important point of all of this. At the end of the day, you need to have a market where the little guys really truly are protected. There is no truth in this whole situation that should lead you to conclude, in my view, this is my humble view. You can feel free to disagree with me all day. I'm not gonna get mad at you for disagreeing. In fact, just know if you're in the chat saying Boyce is a jerk for saying this, just know I'm not even looking at your comment right now. So you're kind of wasting your fingers. You should probably just like go somewhere else. But at the end of the day, the most important part of this is that the little guy must be protected, because there is no way on earth you should ever believe that all the little guys came out okay. Somewhere in the middle of Iowa or New York or Philadelphia, there's some 24-year-old who got caught up in the BS, who was truly idealistic, who went along with whatever the Wall Street bets guys were saying, and he bought that stock at $300 a share, and he borrowed on his credit card, and he bought, stuff. He invested more than he could afford to lose because he doesn't understand things like that you and I talk about, like diversification and buy and hold and all that. He doesn't understand that. He understands gambling. He's maybe a gambling addict in the making, or maybe he's already there. And he's devastated right now because the dream didn't come true. He saw on the Wall Street Bets forum guys saying, GameStop to 1,000, do not sell, hold the line, GameStop to 1,000. And he really thought GameStop was going to go to 1,000. Well, GameStop didn't go to 1,000. Smart investors knew GameStop wasn't going to no damn $1,000 a share. Whether Robinhood shut trading down or not, it wasn't going to $1,000 a share. Smart investors said, let me get off this bus because the bus is definitely going to crash and burn. He stayed on the bus and he crashed and burned. And those are the people that have to be protected. And I think that there should be ways to do that. So that's my view on this whole situation. I don't believe this was what you think it was. I do believe that everybody saw money raining down in Wall Street. They saw money just being given away freely. And I don't know about y'all, but when I see free money, I go pick it up. And that's what this was. This was free money. But when you get that money, every time you pick up a dollar, that means somebody lost that dollar that you're picking up. I want to protect those people who lost the dollar, if they did not lose that dollar fair and square. That's what it is. That's my position. I'm not changing anything. So please hit the thumbs up button, hit the share button, hit the subscribe button if you haven't done it yet. Also, if you want your children to be intelligent investors, we do have a Black Business School for Children. It's a great program that covers everything from stock market investing to real estate to starting a business. There are self-study exams and modules, and also there's a little degree, almost like a college degree your child can get once they finish the program. So I encourage you, if you want your children to be the smart investors, get them trained early. Do not wait till your child turns 18 to start teaching them business. My children are learning business now. My 11-year-old knows more about business than most adults. All the kids understand that if you're Black, you should have your own business as a backup, just in case that white man decides to lay you off from that job. They understand that ownership is more important than income. So my kids are not being raised to go out and get a great resume and get a good job. They're being raised to build portfolios and own assets. Because if you have a portfolio and you have assets, you don't need jobs. You don't need to worry about your resume. And in fact, actually think about this. A lot of the people that wear suits and ties that have bachelor's degrees end up working for people who don't have bachelor's degrees who get up every day and walk around in their pajamas all day long. So why is the guy in pajamas giving orders to the guy that's wearing the suit? Well, because the guy that's wearing the suit got fed the wrong lie that that getting the education part was all that you needed to be successful. And the guy in the pajamas knows you have to be smart and educated, but he also knows that you have to own some assets. So teach your kids to be owners. That's the key to economic power. That's the key to Black power. That's the key to the next generation. So feel free to take a look at the program. The first month is free if you want to do the monthly option. And I'm out of here, guys. Hit the thumbs up button, hit the share button, hit the subscribe button. Make sure you subscribe to this channel. I'll be back a little bit later. Have a good day. I'll talk to you soon. Thanks for listening. Peace.